Hi, this is Steve, and welcome to another edition of the World of Global Equity Timing. Today we're going to look at a very powerful short sale pattern within the Global Equity Timing platform. I think you're going to enjoy learning about this, and hopefully it'll be very profitable for you. Let's get to the chart right now and take a look. So what we have here, setting up the chart for you, just to get you oriented, is we have the Consensus oscillator at the top of the screen. Now, Consensus is a combination of technical and fundamental factors put into one index. Technically, it measures price information. Fundamentally, it measures things like earnings. When the oscillator is in the red zone, it indicates that whatever stock we're looking at is underperforming 90% of all other stocks on the board. So it's a very powerful indicator telling us that if we get an opportunity to get short, we definitely want to be able to do that. Down below, we have ADA, the Accumulation Distribution Alert Oscillator. When it's below zero, we know that a stock is being distributed, that is being sold, and it's especially powerful when ADA is negative and price is rallying, as we see there. Notice there's a long period of rally. Notice that ADA is negative for the most part. The pink areas indicate when ADA is negative, and had there been any accumulation, in other words, where it was above green for a length of time and it coincided with other factors, we would have had a green zone. So the pink zones indicate that the ADA oscillator is negative in terms of the algorithm, and usually you can just follow along with the negative ADA down below and see it's negative and look as this example, since we're looking at short sales, looking for a rally with ADA remaining negative, and the ADA algorithm did light up pink or red on the screen. Now, when do we take an action on a trade like this? Well, we wait for the atom accumulation, distribution, momentum, sell signals to occur, and then we get short. Notice in the same time zone right here that we had a sell signal that failed and we actually took a loss, but we got another sell signal and it turned out to be successful. Now I want to talk about the trailing stop, and this is a unique trailing stop that we're showing here. This trailing stop tends to go down as price goes down, very gently, giving price action plenty of chance to rally back up without hitting our trailing stop. But notice all of a sudden that this trailing stop accelerates and actually exits the trade. Why? Well, we're using something called the atom price projector in combination with our trailing stop. Whenever a trading signal is taking, we can project where we think price is going to end up terminating, and once price actually hits that price projection level, which for this signal was right down in here, we can exit the trade. And in this case, we are using the trailing stop in combination with the atom price projector. We nailed the bottom exactly. Same thing happened over here. We got another sell signal. Again, the setup is perfect because ADA remains negative. In fact, it had been negative for 69 days at this point. That's a huge period of negativity. Anything over the 35 to 40, 45 day range is pretty powerful indicator of a stock being sold heavily. And again, we had a small rally. And on the small rally stock, the ADA stayed negative. And we once again used the price projector in combination with the trailing stop. Note again the same behaviors we had before. We have the trailing stop gently following price down, then all of a sudden it accelerates and says get out. In fact, it said get out right at the bottom before a fairly significant rally took place. Want to talk about the rally that did occur, and this is interesting because while we have some perfect examples of exiting at the bottom, like right here and right here, we had a rally in here. And what's interesting about this is that the price projector said exit right here after taking these buy signals, and the price continued to rally on up after that. However, what we saw is, and it often happens, is that price may rally above the price projector level, but within a few bars, it comes right back down into the price projector level. Not always, but it did in this case, and we actually were better getting out early because we would have ended up with a loss had we not done that, because the trailing stop probably would have been somewhere in here below price action. Let's take a look at a couple of other points on the chart. Again, we have another sell short point with the consensus X very negative, with ADA negative, and once again we're using the trailing stop with the atom price projector, and notice it nailed the stop. Back here, we had a similar situation, which I hadn't reviewed yet. It was less than an optimal short sale because ADA was not supporting the short sale. It was in the green zone. However, consensus X was, and had you taken that short sale, again, using the atom price projector, it would have actually exited the short sale right at the bottom again. So this is examples of great short sale opportunities within a stock. Were there any trades that didn't prove profitable? Yes, these right here. These had everything going for them. The consensus X was negative. The ADA oscillator was still negative according to the algorithm and according to your visual inspection of ADA. You would have lost on that one. So nothing is perfect, but I do believe that these particular indicators, the consensus X and the ADA, in combination with trailing stops and the atom price projector, can give you a real edge using the global equity timing trading platform. That's it for today. I hope you enjoyed this edition of the World of Global Equity Timing. This is Steve saying good timing and good trading and good day.